Welcome to Mitsubishi Estate Logistics REIT Investment Corporation's financial presentation for the 14th fiscal period ended August 2023. I am Ken Takanashi from Mitsubishi Jisho Investment Advisors. I will explain in line with the presentation material. There are 4 points I want to highlight. The first is on financial results. We achieved 10 consecutive periods of increase in revenue, profits, and DPU. DPU increased 2.7% from the previous period to 7,832 yen due to external growth through the public offering in the previous period. Second is continuous increase of DPU thanks to flexible external growth and financial strategy. MEL acquired 2 properties at 9.4 billion yen in September this year, leveraging low LTV. We have been able to realize steady and continuous increase of DPU through disciplined external growth by acquisition of relatively high NOI yield without offering, despite the difficult market environment where the logistics sector as a whole have been weakening due to rising interest rates. 2 properties acquired were sourced by MJIA and have realized relatively high NOI yield of 4.7% that enables accretive DPU growth. As a result of continuing external growth, we are expecting 3.2% increase in DPU in the coming year. The third is hybrid internal growth. All lease agreements that have expired in the 14th fiscal period have been renewed with increased rent. Increase rate was 8.3%. In the 15th fiscal period, we have completed all agreements for all planned expirations, and the increase rate is expected to be 5.4%. We believe continuing strong internal growth can contribute to further DPU growth going forward. Last of all is ESG. MSCI ESG rating was upgraded to single A this August. We also attained GRESB Real Estate Assessment 5 stars, the highest rank for 4 consecutive years this October. Now, I will explain about property acquisitions in September this year. MEL acquired 2 properties at 9.4 billion yen with attractive NOI yield through PDP and CRE in September. On the right side of the page, impact of the acquisition on various indicators are shown. We expect stabilized DPU increase of 3.3% and NAV per unit increase of 0.5%. As for LTV, we have reached the lower limit of stabilized level of 40 to 50%, but in order to raise unitholder value continuously, we will continue to manage LTV at a conservative level, striking a balance between equity cost and debt cost. On pages 6 and 7, I will explain the outline of acquired properties. First, I'd like to start with MJ Logi Park, Kakogawa 1, acquired on September 29th. This is a development-type project based on PDP, Partnership Development Program, which is the asset management company's unique program. Acquisition at an attractive yield was realized as the asset management company provided support in logistics facility development of JR West Real Estate and Development Company. This is a multi-tenant logistics facility equipped with truck berths on the first and the second floor, respectively, with a slope. The location is very convenient for delivering to broad areas of West Japan. The second property is MJ Industrial Park, Koriyama, which was acquired on September 19th. This is sale and leaseback by Kinugawa Rubber Industrial. The company is a seller of a land we had already acquired. This is a second CRE project with the same company, leveraging the continuous relationship we have been building. This property is located in the largest industrial park in Koriyama City, which is covered by extensive road network of Tohoku Expressway, Banetsu Expressway, and other artery roads, and where one of the largest cargo terminals in Japan is located. This is used as a site to manufacture automotive parts. Slide 9 shows the NOI actual and forecasts. In the 14th fiscal period, expenses increased because of property tax for properties acquired in the 12th and the 13th fiscal periods. On the other hand, in addition to internal growth of existing properties and external growth by full revenue contribution of 8 properties acquired in the 13th period, we finished the period at 6,045 million yen, an increase of 100 million yen. For NOI forecast, through external growth by property acquisition this September that I mentioned earlier, and continuous rent hike of existing properties, we are expecting the 15th fiscal period to increase versus the previous fiscal period by 195 million yen to 6,241 million yen, and the 16th fiscal period is expected to be 6,363 million yen, an increase of 122 million yen. We have constantly realized our NOI growth since the listing, through continuous external growth and steady internal growth. On page 10, I will explain the DPU transition. We are expecting continuous growth of DPU in fiscal periods, mainly due to NOI increase, as mentioned earlier. We have realized 10 consecutive periods of increase in DPU, and through continuous external and internal growth, we aim to further accumulate growth. From the next page onwards, I will explain our growth strategy. This is external growth strategy. We acquired 2 MJIA-sourced properties this September. In conjunction with the financial results briefing this time, we added 1 property developed by the sponsor to the pipeline. We now have secured 14 properties in the pipeline, which is 810,000 square meters in total. We are aiming for further external growth, leveraging these properties at the right timing and size, taking into consideration the market environment. Slide 13 is our internal growth strategy. We have rent revision track record at the top. We have been able to realize rent increase for all expirations with 8.3% increase for the fiscal period ended August 2023. Furthermore, we have already signed agreements for all expirations for fiscal period ending February 2024, and rent increase is expected to be 5.4%. For the fiscal period ending August 2024, around 30% of the agreements to be renewed have already been concluded, and together with those with conditions agreed upon already, the ratio will be around 40%. We believe we will be able to maintain this upward rent trend, taking into consideration current progress of negotiations. The asset management company is steadily accumulating hybrid internal growth through unique efforts, including significant rent hike by renewal of refrigeration facilities and continuing with new green lease agreements and others. On the next slide, slide 14, I will explain about the impact of inflation. Left side of the page shows the impact of inflation on operating rental revenue. Multi-tenant facilities account for roughly 60% of our portfolio, and out of those, slightly more than 80% have remaining lease term of less than 5 years. As I explained earlier on internal growth slide, we have been able to realize strong rent increase, constantly outpacing inflation rate over the past years. On the other hand, single-tenant properties, including BTS and land, Many are long-term agreements contributing to long-term stable revenue. I will now explain about the impact of rising utilities costs. MEL burdens utilities costs just for common areas of multi-tenant facilities, and it is limited to only 4.5% of the total floor area of the portfolio. And now, the rise in utilities costs have calmed down, and we are realizing profit improvements through measures such as reviewing ways of billing and billing unit price to tenants, introduction of solar power for own consumption, and others. Next, on slide 15, I will explain about our financial strategy. As for our financial strategy, we strengthened our balance sheet backed by high credibility of our sponsor, Mitsubishi Estate Group, with a top-tier favorable economic conditions among J-REITs of average remaining debt duration of 5.5 years and average borrowing interest rate of 56 basis points. We have structured the resilient financial base that is well lengthened and fixed to reduce the impact of rising interest rates. In July this year, we were able to issue our second green bond at a favorable condition of 0.9% for 10 years by identifying the market timing accurately. We leveraged our LTV in borrowing for acquisition this September, but we are still maintaining low level of LTV, which is expected to be 40.2% at the end of the 16th fiscal period. Please go to slide 17. I will explain about ESG. As described on the left hand, we received certification from SBTi as science-based targets regarding our greenhouse gas emission reduction targets set in March 2023. Also, on top of receiving 4 consecutive years of 5 stars from GRESB Real Estate Assessment in 2023, MSCI's ESG rating improved to single A. We are also continuing to promote ESG financing as well. Last of all, I would like to explain about our mid to long-term strategy. Please go to slide 19. We have steadily grown our asset size thanks to continuous public offerings and effective use of LTV. We are now facing continuous hike in long-term interest rate, and it is difficult to foresee the market environment. However, we will continue to achieve external growth by identifying the appropriate timing. As for DPU and NAV, we have realized 10 consecutive fiscal periods of growth. Going forward, we will continue to make efforts to improve unit holder value, mainly driven by steady external and internal growth. This is all from me. Thank you for your attention.